Hi everyone, welcome to today's video. So on today's video, I'm going to have a discussion about Cafe Coffee Day Enterprise and what was the reason why this stock has fallen by 85% approximately, and whether or not is this a great buying opportunity or is it simply a value trap for retail investors. So we are going to do a complete analysis, and please watch the video till the very end. Please don't understand half the things and jump into buying this stock. Very important message, and also this is not a buying and selling recommendation. Now before I jump into the nitty-gritties of today's video, a very quick shout out to our sponsors, which is Cuckoo FM. They are a fabulous audio learning platform. You can go and listen to several audiobooks. I'm currently listening to a show which is around Indra Nui's life and how she built the PepsiCo empire. So I'm linking a few things that I'm listening to Cuckoo FM in the description box, and you can check it out and also avail a very special offer from them. So let's get the video started, and there are three specific parts. First and foremost, I will help you understand what was the reason for the fall of Coffee Day Enterprises. The listed company name is Coffee Day Enterprises, right? So whenever I say Cafe Coffee Day, it simply means Coffee Day Enterprises. CCD is the business name and Coffee Day Enterprises is the listed company's name. Second, what is the specific reason as to why this stock is gaining so much prominence right now? Should we believe all these narratives and start jumping and taking positions in this stock? Third and finally, I will tell you that how you should be taking positions in this stock in case you are interested. So let's get the analysis started. So first, let me take you to Coffee Day Enterprises stock and help you understand how they are making money. So you will see a bunch of different segmentation, and what you would predominantly see is that majority of its revenues are coming from this and this, right? So CCD, Cafe Coffee Day, and the listed name is Coffee Day Enterprises. There are two major business lines, right? So the first is the coffee business, coffee plus food business, right? So when you go to CCD, you drink coffee and you also order something to eat. So they are making roughly 36-37% of money from there, right? They also have coffee vending machines, etc., which can be lumped into this business stream. The second major business stream for Coffee Day Enterprises is the integrated logistics devices segment. Now, what does this exactly mean? Let me depict that through an example by taking you to one of the companies that was managed by Cafe Coffee Day. So here is a very quick outlook about the logistics arm that Cafe Coffee Day manages or used to manage. So let me first and foremost take you to a very old article about Mr. VG Siddhartha, who unfortunately passed away. He used to run Cafe Coffee Day's business, and back in 2010 he acquired a logistics business called as Sikal Logistics Limited. So let us very quickly check what Sikal Logistics actually does. So you can see from the website of Sikal Logistics that they are providing infrastructure solutions, for example mining and transportation, integrated logistics. So what do they precisely do in integrated logistics? So they do a bunch of different things. For example, these are some of the key projects: business scoping. They are working with NTPL, and what are they doing? This is a contract, 5-year contract for end-to-end logistics for miners to power plant. Now, this has got nothing to do with coffee business, but this is a very important point about the Coffee Day Enterprises or CCD, that they are just not into selling coffees, or they were not just into selling coffees, they were also in logistics play, and they were making a large chunk of money. So I'll display that split again for you. 43% of their money was coming from integrated logistics play. Now with this clarity, let us start analyzing as to what were some of the prominent reasons why the firm fell. I will put up the chart again. This is what the chart used to look like, that back in 2015, 16, 17, the stock price was trading at roughly 350 rupees. Now, right now, it is trading at roughly 50 rupees. So much wealth has been eroded. What were some of the primary reasons for this? So there are three specific reasons that I could figure out. The first and foremost reason is that the company tried to grow really fast, and it was on a path of unsustainable growth. Now, what do I mean by this? Now, there are primarily two ways of growing a business. The first way is called as an organic way. So let's assume that I'm making t-shirts. Now, I'm selling these t-shirts for, let's say, 100 rupees. And all my marketing, production, manufacturing, sourcing, everything included, it takes me only 30 rupees to manufacture this t-shirt. So what is my profit on every t-shirt that I'm selling? I'm making 70 rupees. Now this becomes my business profit. Now if I'm selling 1000 t-shirts, so 1000 multiplied by 70, so I'm making 70,000 rupees as profits. Now if I'm able to maintain that sales, I will keep on reinvesting that profit into my company. So I will reinvest this, and from a small firm, I will become a big firm. Right? So this, in very simple terms, is called as organic growth. That I'm selling a very profitable product, I'm picking up that money and I'm reinvesting into my company, and my company is growing. So this is a very organic way of growing a company. Now, second method is called as an inorganic method. So here, what I'm doing is that I'm borrowing a lot of money from people and I'm opening stores after stores and I'm just expanding my sales and I'm undertaking a bunch of business expansion on borrowed money. So that is a very dangerous game that CCD played, which eventually led to its downfall. So this is the news clipping that I was able to find. And if you take a look at this, what you will see is that Cafe Coffee Day back in 2018, 2019, it used to have 1,752 outlets, 1752 outlets. During that time, something like Barista had 200, McCafe had 190, Starbucks had close to 150, and Costa Coffee used to have 50 outlets. So this can only mean two things. One, that Cafe Coffee Day thought that, you know what, we are going to literally monopolize the coffee business and bunch of other businesses that we are running. They were just so far ahead in the race in terms of how much the business had expanded. But there is a massive problem with this story, and this can be analyzed from the sales number. For example, if you take a look at the sales from 718 crores, it went all the way up to approximately 4,100 crores in revenues. But if you take a look at the profits were not growing at a massive scale. Despite selling products in the scale of 4,100 crores, they only had profits of roughly 106. And in majority of the previous years, this net profit was still negative. So essentially, the company was on a path of inorganic growth. So this was a major problem for it. Now, which brings us to the second thought process of Cafe Coffee Day management. They thought, you know what, if we keep on playing this empire building game, so empire building game simply means that you keep on borrowing money and keep building your business empire. If you keep on doing it at one scale, you will become so big that you will be able to go and acquire other companies. But that is where the twist in the story happened, which brings us to the second reason of the downfall. Now, in order to build this empire of 1800 stores, CCD had to raise a lot of money, and it executed almost every option it had in order to get this money. They executed debt financing. So debt financing simply means that you go and borrow money. Their second option is that dilute your equity. So equity financing simply means that you're selling your own company. The promoters are selling their own shares in order to raise money for their firm. So they were taking more debt also from the market, which means that they were going and borrowing money from external debtors. And at the same time, the promoters were diluting their own holdings. I'm not trying to say that this was done with malintent. All I'm simply trying to say is that sometimes what happens is that if you're trying to build your business, you might dilute a lot of your equity. For example, if I own 100% of a business, I can make whatever decisions I like. But if I have sold 70, 80, 90% of my business and I'm only 10, 15, 20% holder of that business, then I have to seek approvals from everyone to make any major decision. So this leads to less business control, and this is what CCD suffered from. Now I can show you the numbers also. If you actually check in investors, you will constantly see that from 2019 onwards, they have been diluting their equity. Why? Because they were defaulting on their loans. They were having cash flow problems. There were a bunch of negative things that were happening with the company. So therefore, you can see that from 2019 onwards, back in 2019, CCD had a lot of stores, but those stores were not being operated profitably. So they had to raise further money. The only way to do it was to get into equity financing now. That sell your equity to raise some more money to pay off the debtors. To cut the long story short, we have reached a situation where the promoters have sold a large part of their holding. FIIs have also cut down their holding from roughly 6% to 3.5% now. DIIs have completely sold off their holdings, and we are just stuck with public. And retail shareholding has gone up from 40% to roughly 81.55%. Now, just a very quick point here that what is the issue with not having control over your business? So you can see from this chart that back in 2020, CCD or Coffee Day Enterprises, it tried to sell one of its business arms, but it was unable to do it to Tata Consumer Products because their debtors, people who had lended them the money, said no to that deal. And by the way, this included Yes Bank. So the problem is that when you have no control over your business, you can't make these type of strategic decisions also. Now comes the third and the most important reason as to what led to the downfall of Cafe Coffee Day. Now, the answer can be figured out by looking at the ROCE. Now, here you can see that the ROCE is negative now, but even at its peak, coffee business was not a very high margin profitable business. How can I prove this to you? Let me take you to some numbers for the most profitable coffee business in the world, which is of Starbucks. It has the strongest coffee brand. The type of products that they sell, for example, I'm a black coffee lover and I drink a lot of black coffee. If I were to go and drink black coffee at Starbucks, it costs 350 rupees, which is madness. And with Starbucks, they also control their own franchises. So that way they are able to improve their profitability. Now, despite all this, take a look at this, right? So here are the sales number for Starbucks. And this is just for reference purpose. you can see that now despite such high sales number, look at the profit margin. So this number states 30 million. This number states approximately 30 million. Now look at the earnings before interest and taxation. So here you can see that it almost becomes 1/6, which is 15 to 16% profit margin on the entire sales of the company. Now this profit margin is very, very low to begin with. Now, if a company whose brand value is not as strong as Starbucks, which cannot price its product compared to Starbucks, which does not have control over its own franchises, it is a recipe for disaster. So which brings us to the second half of today's video, which is that why is this stock price surging all of a sudden? It is giving spike after spike. Should we take an entry now? Okay, so let us have that discussion. So the reasons why the stock price is bouncing back, there are three specific reasons. So one is that there has been a leadership change. So Malvika Hegdeji, who is the wife of the late founder, she has taken over the business and she is exhibiting excellent leadership. For example, she has been able to bring down the debt of the company. I will show you the balance sheet in a minute. So that is a step in the right direction. Second, she has been able to bring together new investors into the company. So that is another good play that she is making. And third and finally, she's been able to create a little bit of maneuvering room in the sense that by working with existing set of people who have given debt to CCD, she had been able to get some leeways from these debtors in order to run the company. So these are all steps in the right direction, no doubt about that. Second reason why the stock price is surging is because of the fact that people think that, you know what, this stock price just cannot go any lower than this. Almost all the bad stuff that could have happened with this stock has already happened. I somewhat agree with that. Now, third and finally is that CCD is a great brand. For example, almost all of us would have heard CCD and most of us would have had a CCD coffee. So the brand value itself is very, very strong to begin with. That was one of the reasons why Tata Consumer Product wanted to acquire this firm, because of the brand value. So this brand value does not go away. But what should be our final verdict? Because there are definite pros and cons. Now, before I share my final verdict with you, whether or not you should be investing in Coffee Day Enterprises or not investing in it, let me just very quickly share the final output on the borrowings part. If you go on the balance sheet, you will clearly see that the borrowings went up and up and up till 2019, and over time they have started to come down. Now, this is somewhat of a mixed signal. It's not as if that just because borrowings are coming down, you should go and jump and buy this stock. No, nothing like that. Because a lot of businesses are being sold. For example, at the start of the video, I told you that CCD's businesses are twofold. One is selling coffee and food, and another is the logistics play. Now, one of its prominent arms, which was Sekal Logistics, is now under bid to be sold to others. So then, what is the final verdict? Should you be buying CCD? Should you not be buying CCD? What should you be doing? So there are no clear answers here, unfortunately. There are pros and cons, however. The pro is that the borrowings are going down and the brand value is very, very high. And it looks to me that everything bad that could have happened with the stock has already happened. But the major problem still remains that there are no avenues for the firm to make sustainable money. So maybe even the current valuation of 50 rupees might not stand, for the simple fact that the coffee business for them is not very profitable for them, and their cash churning arm, which is the logistics arm, it is also getting stripped out and sold to pay off the existing debts. So what would I be doing? So I would just wait for the entire business restructuring to happen, because the company is currently going through a massive business restructuring and it would be too early for me to jump in. I'm completely okay buying this stock when it reaches 150 in case it ever does. But I will only invest in this business once there is enough clarity that what is the next chapter of growth for CCD. But I wish Malvika Hegdeji the best. She's doing an amazing job and I'm sure that she will be able to take this company to new height. And I really, really hope and wish that a great brand like CCD survives. So let me know your thoughts, whether or not you would be investing. What are some pros and cons that you see in this business? And please don't forget to hit the like and subscribe button and check the links in the description box to get a very special offer from Cuckoo FM. Thank you so much and I will see you tomorrow.